Hey everybody, this is Jose Blasco. We are about to get started, and as always, I'd like to ask you for a quick confirmation with a quick message on the chat box, just so I know you hear me. Sound should be good, everything should be good to do the session normally, as always. But again, it's important for me to receive your confirmation so I know you hear me well, so we are ready to begin. In the meantime, I will be turning on the video stream as well, so that way we are connected in a proper way, and we can get started in just 13 seconds. Here we go. How are you, everyone? Hello from the bottom right corner. Here we go. 5 seconds to go, guys. Almost time to get started. Okay, so again, confirmations and hellos on the chat box. That's what I am expected. How are you, Maka, everyone? Good to see you all. Let's begin. We are live, everybody. Welcome to the session, everyone. Today is March 25, 2021, Options with Options. Looking forward to continue what we started yesterday. Looking for market opportunities, taking advantage of the beauty and flexibility of options trading, adapting to the market conditions, as I always say, which is such a great advantage. Before we get started, disclaimers on the upper left part of your screen. As you can see, the disclaimer is being highlighted. Please read it carefully. Do not skip it. Do not skip words. Read it entirely, please. It is important information. Trading involves risk, and therefore it is important that you understand the content of the disclaimer. How are you, Ahmed? Good to see you as well. Very good. So with that said, from a point of view of agenda, as always, we just said hello to everyone. We all said hi to each other. So welcome to the session one more time. We are simulcasting, meaning that this broadcast is not only happening in our website, tradewithufos.com/live, but it's also happening in other locations, such as YouTube, Facebook, and so on. And of course, depending on where you are in the world and the distance to the broadcast servers, and also depending if you use Facebook or YouTube or our website, all those different places will have probably very likely different levels of latency and therefore a little bit of video lag. So just keep that in mind when you're watching the session, and especially when you interact with us on the chat box. Okay. Also, the way we are simulcasting has to do with adapting to the two key groups that we have in our community, which are, in one hand, the traders looking at trading as a part-time thing, if you wish, and then we have the other group, which are the traders looking to master every angle of trading, never got enough, always want to learn more. And again, for that, we run the sessions in one format, but at the same time, two formats at the same time, which is free access in YouTube, Facebook, and so on. But the sessions are shorter duration. So you have the same content, the same quality, but less quantity. And then more duration, full duration in our website, which implies a subscription as a coaching plan member. You can see all the information on our website. Okay. Mark, I see your question there. Ahmed too. I'll be with you in a minute. Also, Maka, I have received your email with your question, and I didn't reply to your email because I was expecting to see you connected with us today as you are, and therefore I will be bringing an answer to you in the session itself, if you do not mind. Okay. And finally, again, the structure of the session typically would be to look at the market, then look into trade management, trade review. Yesterday, we spent the whole session doing trade management. And then typically, most of the time would be spent looking for new opportunities. But again, yesterday we got busy, isn't it? And therefore, there were multiple things to be done. Okay, so let me go ahead and get Maka's email first of all. So as we begin the session today, actually, the first thing I want to do is to answer your questions, guys. The questions on the chat box, as well as the email I received from Maka. And from there, we will then begin. Okay, so I'm just gonna close the introduction slide, get into the charts, okay, and begin the session this way. Okay, so we'll start with Maka. So Maka sent an email to me, and it seems that the fields that you got were different than mine, and therefore the P&Ls that your account was showing were quite different. Okay, so I'm back to the screen where you can see the positions I have right now. And when looking at Facebook, which is the trade that you were asking about on your email, it seems that we had significant differences when it comes to the P&L of the 230 and 225 call, which are the ones I rolled yesterday from 230 to 25 to be 255 to 50. Okay, those are the changes that we did yesterday, isn't it? So yeah. So again, the differences that you show in your email are quite substantial, and on top of that, it is quite strange that the 230 put that should be a profitable trade, right? That one was showing you a loss, where the 225 put was showing you a profit, where it should be the opposite. Okay, so my first assumption then would be that maybe there was a human error made when you executed the trade MACA, and instead of buying the 225 and selling the 230, what you did is that you did the opposite. Okay, you bought the one you were supposed to sell and you sold the one you were supposed to buy. I would say that's probably the case, and you did send a screenshot of your, how it looks on your screen, but unfortunately, for whatever reason, the resolution that came up was very, very low, and I cannot really read if you have a +1 or a -1 in front of each of those positions. So therefore, my only assumption that I could do at this time would be that. Okay, so here is something that we could do while in the session, so that way, hopefully I can help you this way. Let me, 1 second, I will give you a link. Here we go. So I'm just gonna type it on the chat box. Okay, so here is a website that you could use right now to take a screenshot of your screen, and the screenshot of your screen, instead of being sent via an email, will generate a URL that you could post on the chat box, and then all of us can get to see your screen, if you don't mind sharing. Okay, if you mind sharing, so then it's okay. Just send me the link in an email, and I will check that after the session is over. But that way, that would be the easiest way for me to get to see your screen real time, and therefore we can hopefully be a bit more precise on understanding what's happening, because you are right with what you said on your email. The results of your trade, they don't make sense based on common sense, and therefore we need to find out what the reason is for that. Okay, which again, my assumption would be that you ended up buying the 230 instead of selling the 230, and selling the 225 instead of buying the 225. That's what I'm thinking. Okay, but again, this is something that we need to double check. Okay, so Maka, if you want to use that web page to do the screenshot, feel free to do so. Again, of course, that's gonna allow everyone to see your screen. So if you don't feel comfortable about that, because maybe it's a real account instead of simulated, I'm not sure about that. So then you just email it to me, and I will answer after the session is over. Okay. Cool. More questions. How are you, Priyat Manto? I didn't say hi to you. How are you, my friend? I have more questions here from Mark. You were filled on the roll at 35 this morning. Very good, Mark. You see, patience pay. Okay, so that's very, very nice. Perfect. And the good news about the rolls is that we don't have a rush. Okay, so this is not like you're gonna miss a trade if you don't do it immediately, and so it's a good thing for you to take your time. Okay, very good. Ahmed, I have a question. Jose, yesterday when we closed the FL for March 26 and we rolled it to April, the close P&L was -94, so it cost us this amount when we rolled our position. Yeah, it cost you that amount as a loss, if you wish, but this is also additional credit that you collected with the new put you sold, isn't it? So in other words, this is a temporary cost or a temporary loss. It's not like this is a loss which is locked in, and that P&L, is gonna be, against you no matter what. Again, you collected that loss temporarily, but remember, we also sold a new put on AFL. Okay, the one I sold was traded at 160, meaning that the difference between 160 and 94, assuming that that was my fill as well. So the difference will be the net additional premium that we collected, right? So again, just keep that in mind that if you are selling a put and the market goes down, so in order to close the put, you will need to pay more, and that will show us a loss, in this case 94. Okay. But again, it's not it's not the end of the story, because again, this trade being a calendar will conclude around April 30, and this is April 1st, meaning that next Friday we'll sell another put, and the next Friday we'll sell another put, and the next Friday we'll sell another put, and all of those puts will keep improving the trade. And of course, if the market keeps going down, every time we roll, we're gonna have to pay more. So we'll collect another temporary loss, but then we get more premium, right? So at the end of the story, it's all good, and it doesn't matter if the stock went up or down. Even though you are right, temporarily, you do need to come up with those $94 to be able to close it. Okay. Yeah, you should be short the 230 put, and you should be long the 225. That's what you have. So that's then correct. And therefore your P&L doesn't make sense. Maka, are you executing this in a real account, or is this a simulated account? Because if it's a simulated account, maybe it's just a temporary glitch on the simulated account, because it doesn't make sense. If the market goes up, which is what happened with Facebook, and you have a put spread, right? So that's going to give you a profit, because the total credit that this put spread provided when you did the trade is now worth less, and therefore you can close both for a profit, which is not your case based on the P&L you show. It's a real account. Okay, so this is extremely strange, Maka, and therefore I want to ask you one more question. When you executed this trade, did you execute the trade as an iron condor, and you were selling the calls and the puts all together at the same time? Or were you executing the call side at some point and then the put side separately? Or maybe you were selling the call and selling the put, and then maybe a few hours later you bought the call and you bought the put. Were you legging in, or did you do the whole thing in one shot? What is your case, Maka? In the meantime, I want to show something as well that hopefully is going to be useful, and you could take a screenshot of this if you wish. So let me find it. Okay, here we go. Okay, so let me copy some information on the screen. So this hopefully will be useful to you. You did it as an iron condor. Okay, 1 second, I'll read your message properly, guys. Again, we're spending a bit of time with this, but this is important stuff. You did it 4 legs as an iron condor. And you did it, I'm assuming that you did it while we were in the session, correct? Well, if that's the case, you can see, again, this is a screenshot from TOS, actually. As you know, during the sessions, I'm using paper money accounts, so this is not a real account. But you could see here that I was using the 21 of April expiration date with all those strikes, 310, 305, 230, 225. And this, at the moment of getting filled, paid me 81 cents. This is what I collected. So what I would expect in a real account is that you got a bit less than 81. Okay, a bit less than 81. But you should have you received an email from TOS with a similar content than this. So if you want to take a screenshot, go ahead and take it. And definitely I would recommend you to have a conversation with TOS, either using the chat rooms that they have, which are normally quite efficient, or just pick up the phone and talk to the trade desk and try to find out what happened there, because it just doesn't make sense. If you did an iron condor and Facebook went up, the call side should be suffering, which is your case, but the put side should provide a profit, which is not your case based on what you sent. Okay, so again, you need to talk to them and try to find out what happened, because it doesn't add up. Okay, so make sure that's the case, Maka. And let me know, if you want to email me further as you talk to them, and maybe I can guide you into further conversations. Happy to help. Okay, but definitely it looks like some issue with the execution, because it doesn't make sense. It seems that you got a very bad slippage on the put or something like that, and it doesn't make sense either, because you used a limit order, so you cannot get slippage either. So it's really strange. Okay, so make sure you comment with them, and then you get back to me. Okay, cool. Okay, guys, so let's get back to the charts. Okay, we're having a little bit of a different start today compared to other days, but again, it's important stuff. I answer everyone, right? We got Maka, we got Ahmed, yeah, we got Mark. Yeah, everybody is clear. Looking at all the other chat boxes as well. I believe everybody got the answers. Okay, very good. So let's begin, guys. Market analysis. Okay, so what do we have? Well, the market is falling 0.6% down. Two more UFOs showing up compared to yesterday. Well, not a surprise. Yesterday was the first dot of a down climate. Statistics suggest that it could be 3, or 3 would be a normal thing to happen. So we may see the market fall another 1 or 2 more days before maybe we have another change of climate and now new green UFOs show up. So far, of course, the market is falling. This is actually a good thing for our calendar spreads, because when looking at the VIX, I mean, typically the VIX moves opposite than the market, and we can see how the VIX went, ballistic 7% up, from 19 something that we saw yesterday all the way to 23. That's like 4% up. Okay, and this is exactly what we're looking for, and this is exactly why yesterday, when I was talking about rolling some of the calendars, I was telling you about, even if you roll for very little premium, it's okay, because by using the front week expiration, then you still get a great Vega differential, and when volatility goes up, that's gonna pay. Okay, and so you will see here again. We still got time until April 30, okay? But you could see how, we are seeing a little bit of positive PNL here, even though in order to understand well the real PNL of those trades, the best thing we can do is to actually look at it inside Option Station Pro. Why? Well, because remember that we have been doing some rolls. So the net PNL you see on the positions panel on Thinkorswim or any trading platform, that refers to what you have in your account now, but it doesn't refer to prior profits or losses that you have taken prior to today on that same trade. Okay, so maybe the best way to understand the trade, for example, with AFL, is to look at this screen where yesterday I updated that value, and we can see that the PNL is negative 26. Okay, negative 26. But again, not a bad one, in the sense that given the fact that I believe AFL, well, actually AFL went up today. Okay, so since the market was falling, I was kind of assuming AFL may have gone down. I mean, yeah, there was a UFO there to slow it down. Okay, so because AFL went just slightly higher, well then, so that 52 put that we saw yesterday is maybe providing a little bit of a benefit, but also volatility went higher, so the 52 put that we own as well is also providing a little bit of a benefit, but again, nothing major since the move is only 0.3%. Okay, so kind of like similar to yesterday, just doing our thing. The remaining premium available on the 52 put we saw yesterday is still 2.22. Okay, remember, this is like that because this option is in the money. Okay, so that's why you see $2 something of premium. If the market goes up, we're gonna recover all that money, right? So we're gonna make a lot of money on that put, but so far it's not up, and therefore, one way to understand better the amount of money you make based on time passing, okay, it's to look at the extrinsic value, okay, where you can see here we have the value of 9 cents. Okay, so it's kind of like yesterday. I believe we did a roll for 8 cents yesterday, if I'm not mistaken. Now it's showing 9, now it's showing 7. So we are more or less where we were yesterday. Of course, only 1 day of time passed. Now, if you look at this on Monday, Tuesday next week, it's going to be very different, okay? Because and additionally, hopefully, the stock will go up, and therefore those $2 built in that options contract, then you're going to start accumulating that as the stock goes up, if that was the case. But from a purely extrinsic value point of view, so again, we need to let the whole weekend go by to be able to collect a bit more of that, and therefore start thinking about using April 9, which is too early for us to do so. Okay, cool. Okay, so what else do we have? So we have AFL. Not much to do today because what we had to do, we did it yesterday. We have Philip Morris. So what's happening to Philip Morris? Philip Morris has been going down 0.17%, which is basically doing nothing. Again, we would expect volatility to have raised a little bit. So I'm just going to load Philip Morris on the Option Station Pro so we get to see the net result of the trade after the roll that we did yesterday. Okay, after the roll that we did yesterday. And the net result for the trade is that this trade is currently making $9.5. Okay, we are above the zero line. Ideally the stock will go back down a little bit towards the midpoint, which is 87, and then we can make much more money. But in any case, all is happening according to plan. Yesterday we did our first roll on Philip Morris. There is not much more to discuss. So far, we still got 57 cents built in that option. That one, again, will be expiring next Friday. So same story. After the weekend, on Monday, Tuesday, you can start looking at the differences between the theta on the front week and the next week expiration date, and identify when is the right time to do a roll and keep adding more advantages to this trade while we're waiting to ideally the implied volatility to rise and the stock to travel towards the midpoint of the range. Okay, so all good so far, all according to plan. Calendar spreads are trades that I personally enjoy, but you gotta be patient with them. Okay, we gotta do multiple rolls and stuff until we start seeing some decent P&L kick in. So we gotta be patient with those trades, unless you have some major event, and next thing you know, volatility just like spikes, which could happen, but it doesn't happen often. Okay. And finally, we got Facebook. So what's happening with Facebook? Okay, so let's take a look at Facebook. So with Facebook, here we go. So we did I called it tweak yesterday. It was not a roll, it was a tweak. Okay, why? Because Facebook went too high. Okay, and we were concerned that now we could surpass the statistical range. Okay, yesterday we calculated it could reach up to 315, and therefore we decided to move the bottom part of the range higher to 255, and we had that tweak number one where we basically got rid of the 230 and the 225, and basically we ended up selling a new put at 255 and buying its protection $5 below at 250. That's what we did yesterday. Okay, now what happens today? Well, Facebook has been going down. Okay, so when you look at the P&L today, well, the put side that we added yesterday is supposed to be showing a little bit of a loss. Okay, so minus 81 plus 57 is a little bit of a loss, isn't it? Okay, it's like 20 something dollars, almost $30 of loss. Okay, not a surprise, it's a normal thing, and again, it's how it works, and we are now getting into the weekend in a couple of days, accumulating time decay and just doing what we're doing, while the call side is still losing, obviously, but it's experiencing a little bit of a relief compared to yesterday. Okay, so again, same story. To understand the Facebook trade a bit better, okay, what we could do is to go back to our trade here. Notice I have the real trade here on the top. I have it unchecked, and then on the bottom part I got a 250, 255, 305, 310. Okay, and with all those updated values, you can see that the real P&L of this trade is now minus $15. So really, this trade is not too problematic. We are accumulating $4 per day. So if nothing happens and we go through the weekend, we're going to be back into profit in this trade, and again, getting very close now to April 16. Normally, the last 2 weeks is when we see the greatest speed of time decay. And therefore, we'll see that P&L start getting more on our side. In any case, I have a very good news for all of us, which is a new UFO was formed yesterday. So we are back to the scenario of 2 UFOs above and 2 UFOs below. So next thing you know, it was absolutely right to do the tweak yesterday because we act based on rules, not based on hope. So what we did yesterday was perfectly true and perfectly right and perfectly well done. But at the same time, yesterday there was a lot of concern because statistics were suggesting price may go beyond the range. And on top of that, we only had one UFO to defend ourselves. What's the beauty today? Well, the beauty today is that now we have 2 UFOs to defend ourselves. So this trade is now gaining plenty of probabilities to end up in a better position for us. And also from a statistical point of view, we are looking at 256, 305, okay? Which 256 is here, okay? Which, oh, sorry guys, I'm just moving the wrong drawing. 256 is right here, okay? So again, we are not likely going to go below the green UFO, so we are fine. And 305, okay, it's still a bit above the range, okay, but much less concerning, meaning that again, if we survive this week, we get into the weekend, we accumulate more time decay, we're getting closer to April 16. So it's kind of like we are back to normal, and the extra concern we got to discuss yesterday would be gone on Facebook, okay? In any case, you know what's the plan, okay? If Facebook was to collapse, we would do tweak number 2, and if Facebook was to break our purple area, then we will need to do tweak number 3, right? Which is the conversion of the iron condor to become an iron butterfly, okay? But again, we would discuss that when that happens, okay? And that will be next week. Hopefully not, okay? Or hopefully yes, for learning purposes. Anyway, so here is where we got when it comes to understanding the trades that are available. Now, what else did I do before the session started? Well, before the session started, we're now switching to look for new trading opportunities. Okay, so we're switching gears, and you can see that I have run a scan under non-directional, and you can see that I only got 3 results. So when I was running that scan, what I was looking for were the top 50 options with the greatest implied volatility, okay? And I only got 3. And why is that? Because TradeStation utilizes end-of-day data, and yesterday the VIX was very low. So unfortunately, I don't get what I want, even though probably there are valid opportunities to do iron condors today. I only got 3. And we know Biogen, we checked that the other day, has a very poor liquidity as of now. And Amazon and Google, well, they are amazing stocks and amazing companies. I'm just going to skip them because my assumption is that the majority of you in the session are in learning stages. And obviously, doing an iron condor on a $3,000 stock will imply a very, very, very hefty risk. And I mean, the premium will be fantastic as well. But again, I would basically have to force you to practice this in a demo account. You will probably, maybe some of you could, but the majority of you, I would assume that you would not be able to execute that in a real account just because it's way too much risk involved. Okay, maybe we end up with $1,000, $2,000 of risk for an iron condor, which again it has to do with the price of the underlying asset. In this case, Amazon and Google. So what I'm going to do, okay, is I'm going to invert the scan to look for instead of top, bottom, okay? And therefore, I'm gonna run the scan to look for opportunities, with less premium built in, okay? And if we are lucky enough to have a good setup. So again, to add more material from an educational point of view, so instead of planning on a calendar, what I would like to do is to discuss with you guys either double diagonals or double calendars, okay? And have a little bit of fun with a more evolved type of trading action, okay? But we'll get there when the scanner has completed its work. In the meantime, notice how we got nothing on the neutral scanner for neutral long, and we got a few opportunities for neutral short. Okay, so I could go ahead and work maybe on putting together some credit spread on those neutral short opportunities, but again, I'm going to skip Biogen. I'm going to start with Alibaba, and see what's available. So, okay, so it's pending data, so we're just going to wait. But again, notice, and this is why, you may have noticed the tone of my voice to go down a little bit, because I do remember that in recent times, Alibaba is not providing good UFO performance stats because orders tend to be canceled on that particular stock. Beyond Meat could be a good candidate, but the other ones may lack a little bit of liquidity. Okay, so I'm just gonna wait for this to be loaded. I'll take a sip of water if you don't mind. And it's either we're gonna put together some sort of a credit spread, or we're gonna go ahead and wait until the non-directional scan is ready here for non-directional. My scan takes a long time to execute. Okay, and the reason why is because if you look at my settings, when I look at preferences, I have this 1 minute timeout, which again, it seems that in the last update of TradeStation, they have done some fixes. Okay, there were some bugs about the timeouts, and maybe now I could reduce the timeout and it should be fine, but I haven't tested it. And again, it's I kind of lost a little bit of confidence there, and I don't want to be missing opportunities just because I didn't pull the timeout to be 1 minute, right? So again, this is why it's taking time for TradeStation to do all and perform the scans on my end, because my timeout it's pretty high. By default, the timeout would be like 10 seconds. Okay, so that makes the scanner to be way faster. But I saw, at least in my case, and many of you actually have sent emails with the same problem, that many opportunities were missed. Okay. So Mark, 50% pre and post market. Okay, that sounds good. So let's take a look at it. I mean, it's still pending data, so I need to wait anyway. We'll take a look. Okay, so we got 44%. If we were to look at regular session data with pre and post market, we have 47% in my case. Okay, so I guess that Mark, it's either we're using a very different amount of data on the chart, or you are using different calibration settings compared to me. I use 61.8 for the UFOs. This is the calibration settings I use, and I'm not saying you have to do that. This is user preference actually, and it has pros and cons, as we have discussed in the past in certain calibration lectures that we had. And if you didn't attend those, you can watch them in our YouTube channel under sharpening. But anyway, so I'm gonna have to act on what I have on the screen, Mark, and certainly I'm with you that if you have a different value, you can also act on what you have on your screen. Okay, but I do not want to deviate from my settings and my parameters, because if not, you have the same calibration. So that means that you have a different amount of time loaded on the chart. Okay, in my case, I have loaded 1,597 candles. That's what I have. Okay. Cool. Okay, so now we have different data here. Okay, so now we have Johnson and Johnson, UPS. So we have multiple other companies, other stocks that we could work with. So let's load them first and see if UFO stats are good and everything else is good, and then we can start putting together some trade idea. And again, my intention here, since we are looking at stocks that have cheap options, yeah, it's the bars for sure, Mark. So since we're looking at stocks that have cheap options, my intention here, my main intention, what I would like to do really, is to go ahead and play some sort of double diagonal or double calendar. Okay, so we got 54% probability. That is fantastic. Where are we at in the big picture? Making all times high. So yeah, so there is no more UFOs above, and it's here there is only one. So my only, if I get lucky, it's gonna be by looking at pre and post market. and get more than 2 UFOs. And I got 3, but now unfortunately with pre and post market I get less than 48. So then I'm going to have to pass on Johnson & Johnson and look at UPS. Okay, so UPS, let's see what we've got. That was a problem. Very good, Mark. And again, there is no right or wrong. Okay, if you are using a smaller number of bars, your calculation represents a bit more what's happening in the present. I do like to look at those stats with a little bit more time because I want to know what tends to happen through time instead of what's happening in recent time. Maybe there is a fundamental reason why there is so much institutional interest on a stock, but at other times it's not like that. So I prefer to have a broader understanding and calculate my stats with that broader understanding. Again, that's just me. As long as you approach it mechanically, you're fine, okay? So UPS is giving us 58%, plenty of UFOs above and below. So this is definitely something beautiful for us to work with when it comes to trying to put a trade together. Next earnings on the 27th of April. So let's see with UPS if we're going to have this, what I used to call arbitrage opportunity when it comes to the level of volatility in the further away in time option expiration and the one that is front week. So April 27, so that's going to be April 30, and that is providing us with 32% volatility. Okay, and if I was to do, well, if I was to do today, I got 33, but the next week is 26. Okay, so definitely there are many people that have been already trading options on UPS. Okay, let me try to be a bit more precise here because that's a pretty liquid stock. So depending on the options that I have to use, okay, I'm just looking at many things right now, and I'm going to explain what I'm doing. If I do find a solution to this problem, I will explain exactly what I was looking for. Okay, so where are we at? 167 something. Yeah, so I think it's not going to work because, if we use the front week, we're going to have to use the 167s, and that only pays 5 cents. So we are just not going to do it. Okay, and the next expiration dates are providing just a little bit too little premium. So let's go for the next one, VMware. If you leave the bars to be November 1st, Mark, you run the risk that your TradeStation may become extremely slow because that's a lot of bars. Okay, that's a lot of bars, and again, no need to overdo it. I would just use a number between 1,000 to 2,000 bars, something like that. Okay, so VMware, we got earnings on 5/27. That's good. And we have probability 55%, UFOs above and below. All of this is good. So before I get deeper, let's load the option chain and see what's available. So we are talking about May 27 for earnings. We don't have May 27. We have May 21st, and then we got July. So yeah, so that's going to be a problem. Plus there is lack of liquidity here on the May 21st. Okay, so let's check Merck. So earnings is going to be April 27 as well. Plenty of UFOs, very good UFO performance stats. So let's take a look at Merck and see if we can lock in that arbitrage opportunity. Yeah, got you, Mark. I mean, you will remember what I said if you don't change it, because there is one day you will open multiple charts at the same time, and then you'll be like, what happened to my TradeStation? Yeah, so this is what I was thinking with Merck. Sometimes, I've seen lack of liquidity. Sometimes it's better than others, but it's never too amazing. And really here, liquidity is not good enough. You can see bid and ask prices, the bid ask spread to be just a bit too wide. Okay, so, okay, let's check the last one, IP. Okay, we got 55. We got the UFOs. 4/29 is the earnings date. So let's look at IP. So that will be on the 30th of April as well. And we got 31% here, and here we got 28%. So again, we can also see that already too many people are using that other expiration, okay? And the front week with 1 day to go does not provide enough premium. Now I have to say though that we have an expiration date here on April 16 that has 30%, okay, which is more than 26 and more than 28. So again, ideally you would do April 1st, then April 9, then April 16, but it looks like April 16 may provide a premium enough for us to do the trade. Okay, so let's keep exploring with international paper to see if a trade will be available or not. Where are we at on the bigger picture? So this made all-times high. That was in December 17. Okay, December 17. So in this case, I'm going to have to load data all the way starting from December 17. I'll just do November 17 just to make sure I got all the data needed. So pending data, we're going to have to wait. And the reason why I'm doing that is because this will probably uncover more red UFOs above price. And that way, you know, I can have a proper selection to define my range with the UFOs above and below with IP. And from there, we will plan the trade. Okay. So again, while this is loading, certainly notice that the setup I'm looking for, it's copy paste compared to the other setups that we have with AFL or Philip Morris. We could certainly go ahead and do a calendar spread. Okay. But at the same time, and I'm not sure that with 20 minutes to go, I'll have time to explain all of it in a proper way. But at least, you know, let's make this the first time for you guys to see what is a double diagonal or a double calendar, which are a very similar thing. Okay, so I would like to illustrate that on the screen. We may not take the trade. In a perfect world, I will plan it, and then I will want to compare with a calendar. So you understand the differences, because now you know what's a calendar. So you will understand the differences. Okay, but again, with 20 minutes, we won't have time, but at least let me get you introduced to double diagonals and double calendars. Okay, so we got multiple UFOs above and below. We got 54% probability. So this is really a great setup for us to put a trade together. I need to look at pre and post market just in case. We got 43%. So that's going to be ignored. Okay, pre and post market is not relevant for that stock. We'll stick to regular session data, and from there we are going to use April 30. Same steps I've done in the past. April 30 because this is where the earnings are. Okay, earnings are on April 29. So April 30 expiration represents the earning. And what I'm going to do here is to right click to analyze and buy a single option, not because I'm going to buy a single option, but because I want to have an option on the analysis tab of TradeStation, just so I can calculate my price projections that go from 48.5 to 59 something. So what am I going to do with this? Okay, well, just draw dotted lines. Okay, so 48.5 is somewhere here. Okay, 48.5 is somewhere here, and 59.10 is somewhere here. Okay, so we need to find UFOs above and below. Of course, the obvious choice is here. So if I was to calculate the vertical distance between the current price and that extreme UFO, so we are talking about that high represented by the line, and if I was to project that below, okay, and I was to draw a horizontal line here, so that, as you can see, will kind of coincide with that UFO there. And if I was to define my range this way, and now I was to calculate 60.74 plus 46.05 divided by 2, so now you will know the midpoint is 53.5. Okay, 53.5 is the midpoint. So 53.5 is the midpoint. I mean, it's not the exact midpoint, but if you were to do a calendar, okay, if you were to do a calendar, you would need to be utilizing the 53.5 as the strike to be used. Okay. Now, little bit of lecture time here, if that's okay. What was the problem with the calendar compared to an iron condor? Well, if you remember, the iron condor had a risk profile something like that, meaning that as long as the stock remains between this and this, anywhere in between, you were in a profit. Okay. Now, if the stock goes past below down or past above high, then of course you lose. But the beauty is that the size of the loss is limited. Okay, and those were the wings of the condor. Okay, and that's the beauty of an iron condor, that no matter where you're in the range, you're gonna make the same amount. And if it goes past the range, then you know exactly how much you're gonna lose is limited. If you compare the iron condor with the calendar spread, it's kind of like that. That was the calendar spread, isn't it? Not exactly like that, because this looks more like an iron butterfly, but kind of. Okay. In other words, the range is narrower at the beginning, even though as we start doing roll and roll and roll and roll, what happens is that the range is widening, right? It's like the calendar, sorry for this terrible drawing, it's like the calendar is becoming wider, right? So now the range is wider too, isn't it? That's what happens when we do the rolls, like we have done with AFL, we have done with Philip Morris. So actually the calendar is a great strategy, isn't it? But at the same time, what's the issue? Well, the issue is that while you could potentially make more than the iron condor because it's higher, okay, that peak is at a high level compared to that ceiling on the iron condor. Well, while that's true, the problem is that you would only make that amount of money if you end up exactly in the midpoint of the range, which in this case would be 53.5, which is, it's too much of a coincidence, isn't it? Not only you need to stay in the range, you actually have to be exactly at 53.5 to make the maximum profit. So in other words, most of the times you end up somewhere in the range, either above or below, and you still profit, but it's less. Okay, that's what normally happens. And again, the fact that this is one characteristic, and the second characteristic is that the range is narrower at the beginning. You could see or think of this as a disadvantage compared to an iron condor, which again is not necessarily true when you do the rolls, but it could be a disadvantage. So what could you do if you were to attempt to create a wider range? Okay, well, if you attempted to create a wider range, okay, I mean, and let's say premiums are not too cheap, okay, which in this case they are supposed to be cheap, but let's say premiums are not too cheap. So then you could just do an iron condor and buy a call, right? So buy a call, sell a call, and then below the range, sell a put, and then buy a put. You could do that, but again, because options are very cheap, how much are you gonna get paid for those options you sell? Very little, right? It's not like when we do an iron condor and then we select here, get me the top ones, isn't it? That's what we do when we do an iron condor, correct? We select, get me the top ones. The one I had here is give me the bottom ones, meaning the cheap options. So if you were to sell options so far away, yeah, great, you make this very wide range, but then on top of that, not only because the range is wide, you get paid little, on top of that, because options are cheap on IP, then you get really paid, let's call it peanuts, okay? And not a technical term, but I'm sure you are with me. So then the calendar is perfect in that sense, because with the calendar you are selling options that are at the money or close to at the money, right? If you were to do a calendar, you would buy the 53.5 call or put and sell the 53.5 call or put using two different expiration dates, and because they are very close to the current price, you're gonna get some juice out of those options instead of selling options that are so far out, and on top of that they're cheap. Okay, so that's the beauty. But the downside, as I said, is that the risk profile is like a triangle, and second, the range at the beginning is narrow. So the idea when attempting a double diagonal or a double calendar, it's to widen the range. That's the idea, to kind of get somewhere in between what a calendar would do for you and what an iron condor would do for you. And somewhere in between is going to end up with, instead of a narrow range that looks like that, okay, it's going to end up like a narrow range that looks, sorry, it's going to end up like a little bit of a wider range that looks something like that. So it's not going to be flat like an iron condor, okay, but it's going to be like that, having like, let's call it like a couple of peaks, where if you end up somewhere in the middle, you're going to get paid a bit less. Ideally, you end up here or here and you get paid the maximum, okay? But now the idea is, again, you have a little bit more of a flattening and most importantly, a little bit of a wider range, okay? That's the idea. Now, with what I just said, you may be thinking, so why would you ever do, why would you ever do a calendar? You know, it seems to me that a double calendar, a double diagonal, is always going to be better because, now, you're going to be in that position where the range is wider, and on top of that, you have two places where you can make more profits instead of one place where you would make the top profit. And the reason why you will not always do that is because, again, to widen the range, you are not going to be using at the money options. Okay, you're gonna go somewhere here and somewhere here, as you're about to see. Okay, and because options are cheap, so you're gonna get paid a bit less than what you think. Okay, and on top of that, now you get double the options. So if the stock you are using is not very liquid, so now you may suffer a little bit of liquidity, and we need to do multiple rolls, and every time you do the roll, you suffer liquidity. It's not like an iron condor where you may leave it alone all the way to the end, right? So again, in many cases, the calendar will actually be the right choice. But again, there are other cases where a double diagonal could work very, very well, or a double diagonal, or a double calendar. Okay. So again, just to get you thinking, about all those different ideas and components. Okay. So I'm just gonna put it together. Okay. I'm just gonna go ahead and put together a double diagonal. I'm not sure we'll approve the trade. To be honest, I don't think we'll take the trade. But I'm just going to go through the process one time, so at least you get to see it one time, and in future sessions, I'll get deeper into the concept, I'll get deeper into the planning, you'll become accustomed to it, and it will become bread and butter in one of the things that we do. Okay. In any case, while I'm going to do that, two questions for you all, guys. First of all, I will be disconnecting from the YouTube channel, Facebook, and so on at this stage. Second, I would love to get some feedback from you guys. And how is it going so far? I know I went quite fast into this explanation. Again, it's the first time, so it's fine. If it's the first time you see something new, maybe a bit overwhelming, it's okay. In the end, it's not that complicated, you'll see. But at least if I got you completely lost or something like that, you have to tell me now. So I will be rephrasing some of the things as I put those trades together, okay? So please let me know on the chat box. And in the meantime, I will say goodbye to the ones of you in YouTube, Facebook, and so on. We will see you next time. Thank you for joining me today. As always, it's always a pleasure, my friends. So